Welcome to Estate Planning Beyond the Binder.
Hello and welcome back to Estate Planning Beyond the Binder with Brian Chu. Brian is the managing partner at OC Wills and Trusts and has over 25 years of experience helping families and business owners protect what they've built and prepare for the future. My name is Kevin Rosenquist, and today we're focusing on business succession planning. Whether you run a family business, a professional practice, or a growing company, it's important to think about how that business will continue once you step away. Brian, welcome back.
Hi, thank you, Kevin. Thanks for having me on again.
I just said when or once you step away, but some business owners never step away.
That's very true. That's the hard part.
That is the hard part. Yeah. So let's just start with the most obvious question. Why should a business owner start thinking about a succession plan early rather than waiting until they really make that decision to retire?
Well, I mean, obviously that's what you're planning for is obviously, one day when you do retire, what would happen? What would happen with your business? Well, unfortunately, the reason why we do estate planning in the first place is because we just never know when that time is coming. And that could be tomorrow. And if you're not here tomorrow, what happens to your business? And that's the question I ask people. Yes, and this is planning you want to do anyway, because one day when you do retire, you need to ideally you'll make your, for some people, you're going to be making your business sellable. And so whether you're doing the planning in anticipating that one day or just in anticipation of what if something did happen to you tomorrow, what happens to your business? And so for my clients that own businesses, whether it be a law firm like myself or have a retail business or a lot of, some are a little simpler. They're contractors. Do they have an active business, more passive, like an LLC where they have rental properties? There's all different types of situations. Some of them are pretty straightforward. Some of them are not. Like my business is very complex. So I'm not here due to licensing issues. My business can't continue on without another licensed attorney owning my business. And so the firm has to shut down, as an example, at that point. And so how does that work? In this case, if something happened to me, my wife would be in charge. What does she do? I've got to give her instructions, a plan, hopefully have it documented so that she could do something in fairly short order. Because, the business doesn't stop technically without me. In theory, it doesn't stop, but it does have to stop. And so what does she do in this case? Other businesses can continue on. Some business can run without the person involved. And, what do you do in those cases?
Mm-hmm. Yeah, that makes sense. So in that example you just gave about, someone could, unfortunately pass tomorrow, become ill tomorrow, whatever. What happens to their business if no plan is in place?
It's chaos. And that's a problem. First of all, somebody's got, obviously it depends on what level of planning you do. But even if you do the basic planning, which is make sure that, the shares of your business or the ownership of your business or control of your business be transferred to someone of your choosing, that's step one. I always tell people my job is to get somebody to somebody's desk and they're now in charge. Okay. But that's where the business and that's where the estate planning, it doesn't necessarily end, but that's where it starts. Make sure somebody's in charge. And then step two is the logistical side. Well, what now? Okay. Because your standard estate plan in terms of, the language and the trust or will, whatever it is, it just says you're in charge.
Right.
It doesn't tell you what to do next. And so that's why it's really critical for people that own a business that there be what does that person do? And obviously, depending on who that person is, will affect, can they do it on their own? Do they have to hire somebody? And if they need to hire somebody, I as the person who's running the business need to make sure I have those resources in place for that person, whoever takes over. Who would they talk to? Who would they call? What is the first thing they do? All these things have to be in place for even the simplest of businesses.
What does a succession plan for a business typically look like? I'm sure it's nuanced depending on the industry, depending on the size of the business and all that stuff. But what kind of things are laid out in these succession plans?
Well, let me back up one step first. So first of all, you need an estate plan. Okay. The estate plan says if you pass away, who's in charge of the business? Okay. Because that's the first step. Because if you don't have an estate plan that incorporates the business, the control of the business, then, well, who's in charge? Who owns it? Because the corporation or an LLC, it outlives you. It continues on. So the business doesn't die with you. Okay. But what's changing is who's in charge. It's like in a trust. The trust continues on. In this case, when you have a trust, you typically need a revocable trust. The revocable trust owns the business. Now, as far as anybody else is concerned, while you're alive, nothing else really changes. But if something happened to you, whoever's in charge of your trust, what's called the trustee, okay, they pretty much immediately become in charge of your trust because now they assume control of the shares, appoint themselves as president or manager of the president of a corporation or manager of an LLC, and now they're in charge. Okay, that's the key. They can access bank accounts and they can start making decisions. So that's step one that you need to have in place is the estate plan. Okay, and then that's kind of where the estate plan a little bit ends. In other than eventually, those shares are going to be turned over to somebody, whether that's the person who becomes in charge or somebody else. Those shares will be turned over to somebody eventually, but that's a little further down the road. The next step is the succession planning. Okay, so that's why I kind of draw the line between the two. Is one, somebody assumes control, what do they do? And that's succession planning. And this is not a legal, I mean, this could be a legal document. It could be part of the operating agreement, within the business, especially if you have partners. Okay. If you have partners, there might be a buy-sell agreement. There's usually an operating agreement within the firm as far, or bylaws. What happens if one of the key people that own part of the company passes on? And so that's kind of the, the next step. But again, the first step is in the succession plan. Well, what do you do day one? And again, that's can vary on, if somebody's a dentist, okay, presumably since that dentist owns the practice, that practice probably needs to stop. Yeah, or my business, they got to cancel all the appointments and, figure out what to do next.
Mm-hmm.
And so that's step one of the succession planning. What is operationally needs to happen? If it could be a simple business, like a lot of my clients, they have an LLC that's a billing entity. They're independent contractor, and the company, they need to pay an entity, and the contract that contract with the that person is with the corporation and is with the LLC. So obviously at that point you need to know at least what contract you need to cancel, because presumably that contract can't continue if that person who's doing the work passes on. And then what? Yeah. What are the is there money to be refunded or is there money to be collected? Presumably whatever contract you had would dictate, what the obligation of that billing entity is after somebody passes. So again, it's a wide variety of things. It can be relatively simple, shut it down, cancel the contract, and it's kind of, get the money out of the LLC, and it's kind of done. Because there's nothing to sell. On the other hand, right, like my business is potentially something to sell. And so, I tell people when you're doing a planning, there's three options. A, close it down, liquidate it essentially for its assets and cash. That obviously gets you typically the least amount of money. But again, there's some business where that's all there is. Two, sell the business. Of course, your job as the person who owns the business is make your business sellable. How do you maximize your business? How, if somebody had to take over your business suddenly, why would they pay money for your business? What goodwill or whatever else you have in the business that they're buying. And then obviously the other is keep the business going. Obviously, if you have, especially if you have family members that are already involved in the business or other partners, where it's now just a transfer ownership of a part of the business to somebody else, or there's people already working in the business that can assume control and continue operating the business, then, that's the ideal situation.
So obviously the biggest mistake you can make is to not have a plan. But what type of mistakes have you seen people make when doing a plan, when actually implementing a succession plan that maybe you could address here and hopefully help people to not make?
I think most of it just assuming too much. Okay. There's especially in a small business where, one person's really running the show. Okay. They have all the institutional knowledge. And I think they just assume it's too easy for somebody else to gain control of that institutional knowledge. Okay. That knowledge cannot be in somebody's head. It needs to be on paper. It needs to be documented. And that's probably the number one mistake. And even if, it could be, husband and wife, wife, let's say, running the business. She has a business and she tells the husband, okay, if this happens, do this. But they don't take it far enough, because the point of doing the plan in the first place is something could happen to both of them. And so if it's that the successor trustee, the next person up, would that person know what you need to do? So part of it's really documenting what needs to be done in a fashion that can be passed on to whoever's in charge. Okay. Because again, it's one thing to tell your spouse or what to do next. It's another thing to pass on information to somebody who's, again, has probably is a good chance they have no day-to-day interaction with you, don't know anything about your business. And that's really, I guess maybe that's the biggest mistake is not when you're coming up with this plan, assume the person who's taking over knows nothing about your business, you know. And so that's why it's important that institutional knowledge that you have is documented for them, or at least they have the contact to somebody else who has that institutional knowledge, and they can take over, and that person can help them.
Mm-hmm. Yeah, that's a good point. I think a lot of people do tend to keep things in their head, especially with things that they don't think about or as being vital to the business, but actually are vital to the business operating, operating well. When people sit down with you, particularly like a family-owned business, and they're not really sure what to do with their succession, they know they want to have some sort of a plan in place, but they don't know. You gave those options earlier, whether to, pass it to a child, sell it, have someone else take it over. How do you kind of help coach that decision for them?
The number one is they've got to talk to whoever is going to be in charge next.
Right.
And that's where so I'm coaching them. Okay, who's involved? Are the kids? Is your first of all, the two spouses, one or both of them involved in the business? Okay, so that's step one. Obviously, if one spouse is not involved in the business, okay, well, that's the first part. The other spouse needs to know what to do. And then, if there's, adult children, are they involved in the business? I'm just trying to figure out who else is involved with the business. Okay, who else knows something? Is there a manager in the business? Like a lot of people own property and they have rental properties. And so is there a property manager? And if they don't have a property manager, they need to start, thinking about, well, if it wasn't me, who would I hire?
Mm-hmm.
Who I hired to take over as the property manager so that we continue to run those properties. Now, I mean, in some cases, there is built-in stuff that you can hire somebody. On the other hand, the business can be very complex where it's not that easy to hire somebody. Or B, it's just, again, if it's a licensed business, like, where somebody's a dentist, a doctor, an attorney, a CPA, where that, it's a requirement for that business to operate that somebody licensed to be the owner of the 100% owner of the business, what are the options? And so that's where I'm going through first, is coaching them about what are the options. And then, after that is just the details. And it's the same details that you do in a trust. Where's all the money? What bills to pay? All those things you do in your personal life that you need to convey to your clients. My clients need to convey to their successor trustees. Those business details need to be conveyed as well. And then there's obviously contracts and things, obligations and, suppliers and vendors. And again, it depends on, who you're doing business for, all these details that someone needs to know. So, because a lot of times, depending on the contract, the business may still be, responsible for completing a contract they're obligated to do. Again, since the corporation doesn't die when the person passes away, if it's like an ongoing business, those contracts need to be, continue on, or, that family business may suffer a significant liability if they're not able to complete the contract that they owe somebody else.
In succession plans that transfer a business from one person to another, if are there legal arrangements that can help that go more smoothly?
Again, it depends on again, if it's a wholly owned business, like if I just own it, there isn't. I mean, the trust is the arrangement in the sense of the trust. I sign the shares of my business to the trust. Something happens to me. In my case, my spouse assumes sole control of the business, or my successor trustees assumes control of the business, and then that's where the succession planning takes over. On the other hand, if and so again, that's just a matter of documentation. But there are obviously other people that own they're partners with other people, or I guess it's two situations. You're a partner with somebody else, where usually there's what's called a buy-sell agreement between the partners, because typically the partners don't necessarily want other family members to be in business. They don't want to be in business with other family members. They don't add any, especially if they're not part of the business, because they don't add the same value as a person like, that is working within the business, as an example. So the buy-sell agreement will give the right for the remaining owners of the business to potentially buy out under whatever negotiated circumstances, negotiated plan, how they would buy out the family of the person who passed away. That's probably the biggest. I mean, that's probably the most important is the buy-sell agreement. And that's where they start talking about things like key man insurance and things like that. And that's typically part of the buy-sell agreement. And then the other is, just simply the operating agreement. Okay. It could be a much simpler business where it's, maybe it's a little more passive, owning rental real estate. It's not as active where it just in the operating agreement, it says what happens.
Mm-hmm.
Again, whether it be a buy sell or is it, does the other owner, the new, does your heirs, do they just assume control of your shares and they just get paid like everybody else that you got paid in the past? So it could be something as simple as that, but having that, that operating agreement, or having that buy sell agreement amongst the existing owners, I think is really important.
What about tax issues? Are there any that business owners should expect when it comes to succession planning?
For the most part, when it comes to, people passing on, there aren't a ton of tax issues for most of us, unless you're fortunate enough to be worth more than, $14 million an individual or $28 million as a couple in 2025, which would be, $15 million and $30 million for a couple next year. Unless you have that kind of money, there aren't really much in the way of tax issues, per se. I mean, in fact, for better or worse, you passing away and assuming your business has gone up in value will actually, and then your family has to sell the business. Typically, they'll pay little or no tax at that point on any profit made from the sale of the business at that point.
Really?
So that, I mean, so as I always tell people, dying actually for 99% of us, because we don't have enough money to worry about the estate tax, is a tax elimination event. Taxes are being eliminated because somebody died. The heirs are getting a tax break, what's called the step up in basis. All the gain that was built into the asset up to the point where the person died goes away. And that's even in California, that's even between spouses. If I were to pass away today and my wife inherits my firm and she's able to sell it, she will pay no capital gains tax.
Wow. So
that's why she keeps saying I'm worth more dead than alive, but that's another story.
So for real, the only way to avoid taxes is by dying, huh?
Basically, as people think you pay taxes when you die, it's actually the opposite. People are saving thousands, if not millions of dollars in taxes when somebody inherits assets from somebody else.
Wow. Interesting. And
in California, that's even 100% between spouses because we're a community property state.
Huh. Well, that's interesting. I did not know that.
So if I'm not here at the next podcast, we know who the number one suspect is.
We're talking to your wife. Yeah, for sure. All right. Well, thanks for listening to today's episode of Estate Planning Beyond the Binder. If you own a business, don't leave its future to chance. The right succession plan can protect your company, your employees, as well as your family. To learn more, to get started, visit ocwillsandtrusts.com or call Brian and his team today. Don't forget to leave us a review. Leave us subscribe to our channel. We very, very much appreciate it. Brian, always great to see you. Thanks so much for all the insight.
All right. Thank you, Kevin. Have a great day.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.